Wonderful. So, well, welcome to our class once again. And so today we want to look at actually what we had for the class is to look at prop firms. But some of us, from the last class requested that we should just go over the lot size, position size calculator thing, just to give some examples of how it works. So I'll quickly go through that, and then we will we'll look at prop firms. And part of the reason we want to look at prop firms is for us to begin to, at least if we're not doing real trading, we can do demo trading. Okay, so let's look at the lot size, position size calculator. So ordinarily, when you want to, when we said we had all agreed that when price starts moving, so if it's moving like this, moving in a trend, if you enter, for instance, if you enter somewhere there and you put your stop loss down there, your SL, you want to calculate the distance between this level and this your entry. You want to calculate the distance, and you want to know what is the lot size that you should have for this entry at this level, and what would be your stop loss. So some people calculate it manually, but thank God for technology, we're able to calculate it. We're able to have tools, free tools on the internet and even on some trading platforms. Like I have one that I use for my MT5 and MT4. And of course, other platforms to have their own specified tools that you can use to calculate your lot size. So just for example, let me go to my charts. I'll bring up my MT4, for instance. So with my MT4, if I do something like this, and I say I just use these tools. I'm sure we can see this green line. So that is my stop loss line, and then this blue line is my entry line. So for instance, if I say I want to enter a trade from that point, and I put a stop loss somewhere up there, and I put a take profit, that's a sell now. I'm doing a sell and put a take profit somewhere down there, for instance, just for us to see, for example. I don't need to begin to calculate what this thing is. All I just need to do is come into this box here and say, I want to risk just 1% of my account, or I want to risk 2% of my account, or I want to risk 0.5% of my account. And once I do that, I just execute. And then you'll see it will put something there. You see it put 0.01. It calculates it automatically for me, right? So that is how that works. It's just easy. I don't need to do any big calculation, just put in the figures I want, and that works very nicely. So when we go to when we have, so suppose you don't have access to this tool that I use, for instance, you have access to the tool as well on the website. So that's the website I shared with us the other day, my FX book, Forex calculators, then position size. So that gives us this tool. So depending on the pair, so you just choose whichever pair you're trading. Okay, so if we say we are trading pound Aussie, for instance, we are trading pound Aussie, and our account size, let's say, is a $5,000. Oh, sorry, this current account currency is the either USD or Euro, or depending on the kind of account. The thing is not coming up now. Okay, so I'm sure it's come up in a minute. Do I want to refresh? So this account size here is 5,000. So I put 5,000, and then I put risk ratio percentage. So this percentage is what percent are you willing to what percentage of your account are you willing to risk for that trade that you are entering. So once you know the distance, so like in this case now, I see that okay, let me use okay, let me use, this is pound Aussie. This is pound Aussie. So let me use this. This is a 34 pip. The entry is, let me use a pending order. Let's say we want to do a buy. So you can see this is 23 pips, 25 rather. This is 25.3 pips from the entry here. The distance between here and here is 25.3. So if we just use this curse, so it's something like this. You can see around 25 point something, right? So we'll go to that box there and just say the distance, the risk we want to place is let's say we want to do 2% of the account, and then the stop loss is at 25. Let's round it up to 25 pips. Okay, so that's 25 pips, and then you just leave this last one as it is and just press calculate. Let me bring this one up. I hope it's not coming up for some reason. Let's see, it won't do it. Okay, yeah. So we'll redo. Let me refresh. Maybe it had some issues in connecting before. So let's refresh it and see if it will come back up again. Let me get that. Where's the link now? This is the link, position size calculator.
828.
Okay, so we'll go to position size calculator. Okay, yeah. Let's see if it will bring it up. Okay, good. So we're looking at pound Aussie earlier. Pound, we just scroll to pound Aussie, that's there, pound Aussie. And then the account is a USD account. So you see, it's a USD account. It can be a Euro account, it can be whatever type of account. Okay, so it's a USD account. And the amount we're using, account size, let's say 5,000. The risk, we're using 2% risk, and then we said our stop loss was about 25. Okay, and then so we'll just leave this last one as it is and just press trade. So it will show you. So for the account size of 5,000 USD, I can use a 0.61 lot size. So all I'll then need to do is to come to my trading platform and put the figures there. So for a 2%, so you can see even this tool that I use here, it gives me 0.6. All right, so they're not far off. Okay, so that's how you use that tool. So I hope that clears it out so we can do that. So supposing you are trading from your phone and you want to know, once you know the distance, you can then do that. This tool here also gives us a swap. So if you don't want to use percentage and you just say, oh, I just have a $5,000 account, but I want to risk only $200 of my 5,000 account. So you can do a swap there. So instead of a percentage risk, it will show, once you press this swap, you then put your $200 there, or you say, I want to risk only $100. It will then give you, once you press calculate, it will then give you the, where is it now? No, risk $100. Swap money. Okay, swap money. You risk $100. If I do this now, so it will give me Yeah, so it gives me that. Let me use a higher amount. Risk let's say $1,000. Okay. And then I want to do the calculation. So it gives me 6.09 lot size. Okay. So you see how it's so easy to use it. And I hope that clears it out for us. Wonderful. Right. So moving on quickly. So we go to prop firms. Perhaps we may have heard of prop firms before, or we may not have heard of prop firms before. But initially, before the last, let's say 5 years or so, prop firms weren't that popular. What we had most of the time, the typical situation we have is that if you're interested in trading, doing online trading, you will need to as a retail trader, you need to get a broker, an online broker, maybe Pepperstone or IC Market or XNES or any of those brokers. And then you then need to fund that account for you to trade. But with the advent of prop firms, essentially that now gives us the opportunity to have access to capital. Those are one of their main advantages. We have access to capital, to trading capital that we can use to trade. Okay, so a prop firm is essentially just please, Adibu, can you mute yourself, please? Thank you. Right. So a prop firm or a proprietary firm is essentially a company that provides traders with capital to trade financial assets in the exchange for a percentage of the profits. Okay, so they'll give you capital. So whether it's 5,000 or 10,000 or 50,000 or 100,000, whatever the amount is, they give you access to that capital. You trade, but before you do that, they give you a trading challenge. So when you pass that challenge, then you can then go on to once you then trade live with them, you then have a sharing formula, maybe 70-30 or I think many of them have gone as high as 80 now, some 75, right? So the traders, you then have a sharing formula that you share with that capital, with that trading firm. So by and large, we have a number of prop firms. Some have come, some have gone. In fact, as at now, we have many prop firms. However, the main ones that I like, is this one called FTMO or the 5%ers, my funded FX or funded Next. There are many others, but it is important that you do your due diligence on any of these prop firms before you start. They all give us trading rules. There are trading rules to them. So we'll look at FTMO. One of the reasons I like FTMO is that it gives you on their platform, you have options to, once you sign up with them, you have option to do a free trial. It gives you for 14 days. So you can do a free trial. So before you take the actual challenge, you go through their the terms of the trading, how many percentage, the maximum you can lose, their trading rules. Just know their trading rules. Once you do that, then you can go to you register with them for the free trial. Do your demo over and over again until you become comfortable that you are able to trade with them. Once on the trial account, you're able to get some nice percentage, you're able to win within the period you've set for yourself, then you will see it's so easy. So this is just the initial registration platform. You just register with them. It will ask you for your name, your number, email address, and all that. You can create, what I did was to create a separate email. I didn't want to mix it up with my other emails. So I created an email for it, which I use. So so it gives you that access to that platform. So I'll encourage us, given that we've talked about different trading processes here, I'll encourage us to sign up with them and do their free trial. Don't go and pay for a challenge. Do a free trial, 14 days. After that 14 days, renew it again. Do another one for 14 days and see how you get familiar with the trading platform. It gives you access to either what's it called now? It gives you access to MT4, CTrader, MT5. They have a number of platforms, but for FTMO, which is the one I recommend, they are very good. They are one of the oldest that have been around. 5%ers too are quite old. They've been around for a long time. So there's reliability and trust. There's a trust level there with them. A number of other prop firms came in and they did very well, but all of a sudden there were issues with them and they stopped paying out to the traders who traded with them. So you have to be careful to look for reputable prop firms that you can trade with. And as I said, the major advantage is that they give you access to funds, to capital. That's the major advantage with FTMO. So not just with FTMO, with the prop firm, they give you access to any kind of fund that you want. So now that we've discussed different trading strategies, we've discussed how to find your stop loss. We've discussed on the school platform as well. We have seen how to place a trade and all that, depending on the level you are at on the school platform. There's a full trading course there. So you go through that. With that, you can then, get onto this type of platform to do your trading. Okay. And then once you do that trading, I want to look at the, where is it now? Evaluation process. Okay. So, so you have three different types of your evaluations, and it gives you the various. So for this one now, you can trade up to evaluation process. Let's go to this one. So you can trade. I want to look for the various amount, the one that shows the various amounts. I can't find that here right now. Okay, yeah, so it's lower here. So you can trade a $10,000 account, you can trade a $25,000, a $50,000, a $100,000, up to $200,000 account. Okay, so by next year, we'll put a proper structure in place. I'm putting something together for those who are really, really serious about it. 2025, we'll trade together, and hopefully the goal will be that by next year, by the time we have our BBC conference next year, the least you'll be doing, by God's grace, is at least $1,000 a month. If not $1,000, my own goal is that I should be able to do $10,000 at least. But let's start with that. That will be for next year. I'll tell us more information about that later. But for now, we have given out various tools, we've seen various ways to trade. So that is it for today. Just talking about prop firms. Do a lot of due diligence. Go to YouTube, look at top, put in the search, in your Google search, who are the top prop firms, do your search and see for yourself. Listen to what other people are saying about these prop firms, and then see which one you would like to sign up with. So all of them have trading rules that you need to abide by. So you should take note of those trading rules. For most of them, whatever fund you pay is refundable after you pass their challenge. They'll refund it to you after you pass their challenge. So it's pretty much like a money back guarantee. but you have to do with proper prop firms. The only one I can recommend really are those ones that I mentioned earlier. So I'll leave the room open for questions. Do you have any questions? Okay, Mr. Michael, billionaire Michael.
Yeah, good evening, sir.
Good evening.
Sorry, it might be a bit lousy here. Sorry, please. I want to ask, what are the advantages and the disadvantages of probably not meeting up to targets? Because I feel there's a target for these prop firms. Like, what are the advantages and disadvantages? Would I be locked out when I didn't meet daily targets, or I don't know?
So there's a target. Okay, so like you see, you can see on this screen now, this one has a 10% target. So if it's this $10,000 account that you're doing, they have a 10% target, right? But for even these targets, initially they used to give you just 30 days for you to trade and hit that target. But now it's the restriction has been removed. So you can trade for as long as you want, as long as you don't violate any of their rules. It's unlimited. The number of days is no longer an issue. So you can trade it for 6 months until you hit their target. They don't care about that. All right. So that is that about target. But what I would suggest is that go to YouTube and look at what other traders have been saying about, say, the likes of FTMO or other prop firms with relation to their trading targets, the maximum stop loss, and all that, what their trading rules are, and see which one is more compatible with your type of trading. So that would help you very much. But as per the number of days for you to hit the targets is unlimited. It's no longer restricted. It's unlimited now.
All right. Okay. Thank you so much, sir. For instance, now I eat probably the target within 1 week.
Yes.
So what happens afterwards?
Okay, so for this one now, so for instance, this is a two-stage this is a two-stage challenge. So you do stage one. After I pass stage one, then once you pass it, you automatically from your dashboard, they will take you have the login details for the stage two. So once you trade and you do that in stage two, once you pass stage two, automatically they will then give you you then go to stage three, where you now have, once you do that and you pass it as well, then you get a refund of what you initially invested with them. You get a refund plus your whatever total that you have in this stage three. And then you just continue like that and you begin to scale up as you want.
Sorry, I thank you so much, sir. Sorry, I didn't get whatever return in what sense, sir?
Okay, that means, so if once you pass stage one and you pass stage two, by the time you get to stage three, so stage one, the account target is to do 10%. Stage two, you have 5%. Okay, now for stage three, you can see there's an X there. So there's no target for you. Once you get to stage three, there's no target. So it's dependent on you. So if you do just 1%, or you do 5%, or you do 10%, it's totally up to you for stage three. But once you do above the initial amount, once you do above this, so if you are starting with $10,000, for instance, so even if you do 10,001 only, and you say you want to make your withdrawal, you're okay to do it. Okay, they will allow you to do that because there's no target for stage three. That's what I mean.
Okay, but everything runs within 1 month, or okay, you said I should just do due diligence on.
You can see it at the top. You can see trading period unlimited. It doesn't have to be 1 month.
Oh, okay.
It's unlimited. Okay. You don't have restriction on the number of days. You can be 1 month, it can be 6 months, it can be whatever period. It can be, I think the minimum days is maybe 3 days or so, or 5 days. I don't remember now. But there's a minimum number of days that, oh, okay, look at it. It's written there, minimum trading days. So 4 days. So you must trade at least for 4 days before you hit your target. If you hit your target before 4 days, you have to wait and trade for those 4 days to ensure that you meet their trading rules.
I'm sorry, sir. I'm really sorry. Please, can you explain that part again? Sorry.
Okay, so we said for the number of trading days for you to hit the target is unlimited. All right. So there are some
All right.
people that are so good that in one day they can hit this target of 10%. Okay.
Okay, sir.
But the
Yes, sir.
their trading rules is saying that minimum trading days is 4 days. So you have to
Oh,
ensure that you
it's
have minimum of 4 trading days before you qualify from their own end.
oh, okay, sir.
Yes.
Okay, sir. So it is I don't really have to hit that target within that 4 days.
No, you don't have to hit the target in 4 days. That's the minimum. You must trade for at least 4 days for them to
Okay.
recognize your trading. But as per the upper limit targets is unlimited. You don't have any number of days.
Okay. All right. So all right, sir. Thank you so much, sir. That's quite
Wonderful. You're
it's
welcome.
amazing. Yes, sir.
Good, good. So I'll just encourage us to go to YouTube because there are a lot of information, free information on YouTube. This one is just an introductory thing. Just check for FTMO and do FTMO review. Just check on YouTube or on Google, whatever it is. Check, let's see, just ask what are the trading rules or what are the things to look out for, all those kind of things. And different people have done all sorts of reviews on them. So just go through them. There are many other trading prop firms, but just go through them and see which one is suitable for you. I'll prefer that you start with FTMO. Do their demo accounts. Don't pay anybody any money. Please just trade their demo account first and see that you're consistent with making profits on their platform. Once you do that, then you can then pay for it. Once you see that you're consistent with making profits, you can then go ahead to pay for it, which they will refund to you if you pass their challenge account anyway. All right. Any other questions?
Yes, I'm sorry, sir.
No,
Just
please
one
go
more
ahead. Go
question.
ahead.
All right. So like for instance, is it possible that if I don't meet the targets, what happens if I don't meet the targets?
It's
Is that
unlimited.
like do I have to start over? Do I need to okay?
As long
Okay,
as you
okay.
don't, flout any of their rules.
Exactly, that's what I want to say. That's what I want to ask. For instance, if I
If you
happen to
breach,
break one of
yeah,
the rules.
yes,
Yes.
if you violate any of their rules, then you'll be disqualified.
Okay. Does it mean I don't have access to it again, or I could just use another account or another email to register again, right?
So you have to then pay another amount of money for you to for you to sign up for them to give you another account.
Oh, okay, but I can still make use of the same email.
Yes.
Oh, okay. All right. Thank you so much, sir.
Wonderful. Okay. Do you have any other question? Okay, so wonderful. Thank you also very much. We'll continue if you have any further questions, please just put it on our platform and then we can take it up from there. Do have a wonderful evening.
I saw the invitation.